Welcome to the deep dive. Today, we're looking at a sector that's, well, absolutely critical globally: power transmission and distribution, T&D.
Uh-huh. Specifically, we're digging into the latest updates from Skipper Limited. They just shared their Q2 and H1 results for fiscal 26. This was on November 7th, 2025.
Right. And this feels like more than just, a standard numbers release.
Oh, definitely. It's really a look at how a major player is setting itself up for what a lot of people are calling a multi-decadal opportunity.
Driven by renewables and grid upgrades, I assume?
Exactly that. The whole global energy shift needs a modern grid. So our goal here is to cut through the usual corporate speak and really get to the heart of what's driving their performance.
Yeah.
What are the strategies, the financials, the tech that backs up these claims of record results?
Okay, so let's start right at the top then. The director, Mr. Sharon Bansal, he highlighted their highest ever Q2 revenue.
Right, alongside record EBITDA.
Which to me, that says more than just sales volume. It hints at, good execution and maybe even better margins.
It absolutely does. I mean,
Yeah.
look at the core figures. Q2 revenue for FY26, up 14% year over year.
Okay.
And EBITDA kept pace, maybe even a better, up 16% to 307 million rupees.
And that pushed margins up?
Yep. EBITDA margins climbed to 10.4%. And maybe the clearest sign of health is the operating net profit. That's the core business profit before any one-off items.
How did that look?
Jumped 32% just in the quarter. Pretty strong.
Okay, so quite a performance. Let's maybe zoom out a bit for part one and look at the whole half year. You mentioned that consistent top line.
Yeah, highest ever Q2 revenue, 12,618 million. And for the first half, 25,156 million. Both periods showing that solid 14% year-over-year growth.
Have you hinted the real story might be in the margins?
I think so. It tells you about the quality of the business they're winning and executing.
Okay.
So those Q2 EBITDA margins, they improved by 30 basis points.
Right, BPs, so 0.3%.
Exactly. From 10.1% last year to 10.4%. Now, it doesn't sound like a lot, but 30 BPs, it suggests either really tight cost control or maybe more likely, given the growth, they're landing better price contracts, maybe those bigger international ones.
And that operational strength, does it flow down to the bottom line before tax?
It does. The operating PBT profit before tax from core operations saw really significant growth. 37% year over year in Q2 and 39% for the half year.
Wow. That's translating revenue into profit pretty efficiently then.
Very efficiently. And they're doing it while sort of tidying up the finances too. The key metric they flagged was the finance cost ratio.
The cost of their debt.
Precisely. Yeah. It improved by 80 basis points year over year, dropped to 4.2% of sales in Q2.
Which is quite a drop.
It is. And they're actually targeting getting it down even further, maybe around 4% by the end of the fiscal year.
That focus on borrowing costs feels strategic, especially if they're planning big expansions.
That's the connection, absolutely. Lowering debt costs frees up cash and just makes them look better when they need to borrow for future capital expenditure or CapEx.
Which we'll get to.
We will. But first, we should probably address that one item that sort of sticks out in the reported profit. There was an exceptional charge.
Yeah, the 106.79 million, it looked like a one-off.
Exactly. It was a payment for an old tax issue, something under the West Bengal Sales Tax Act from years ago. Seems like they settled the principal amount.
And got a waiver on all the interest and penalties.
That's the deal. So, yeah, it reduced the reported Q2 profit after tax by about 79.9 million rupees net, but it's non-recurring. Cleans up the bucks.
Okay. Good to clarify. So moving to part two then, let's talk about the future, because that seems to be driven by, well, just a massive number of orders.
The visibility they have is pretty remarkable.
Record closing order book, right? As of September 2025.
Yep. 88,204 million. That's up 34% from the year before.
And for you listening, think what that means. That backlog basically locks in a good chunk of their revenue for the next, 18 to 24 months.
Gives them huge predictability, stability. Helps with planning, negotiating with suppliers, everything.
And they're still winning new work?
Oh, yeah. The pipeline keeps filling. New orders in Q2 alone were over 12,400 million. That pushed the total for the first half of the year to 32,205 million.
Which is up.
Up 33% year over year. So the momentum is strong.
And that's just the confirmed orders. I saw a mention of their bidding pipeline.
Yeah, the potential future work they're bidding on, they're saying that exceeds 300,000 million. It's a huge number, just the scale of the demand out there.
It's not just volume, though, is it? The type of orders matters.
Immensely. Quality's key. They specifically mentioned securing 2 big 765 kilovolt or kV transmission line projects from PGCIL.
That's the Power Grid Corporation of India. And 765 kV, that's extra high voltage, EHV territory. Very complex stuff.
Right. Winning those high-spec, probably higher-margin EHV projects domestically is a big deal. It proves their technical chops, which is vital if they want to win similar big projects overseas.
Okay, let's break down where this growth is coming from, the different business segments.
Sure. So for the first half of fiscal 26, the revenue mix was roughly engineering, that's the main T&D structures business, about 80%. Then polymer products, 10%. And infrastructure, the other 10%.
And the core engineering part.
Best ever first half revenue. Grew 21% year over year. Solid performance.
What about exports within that? That seems to be a focus area.
It really does. Export revenue jumped 27% year over year in H1, hitting $5,234 million.
So exports are now what, about a quarter of the engineering business?
About 26%, yeah. It's real evidence that they're making inroads internationally, not just relying on the domestic T&D boom.
Shows they can compete on global tenders, meet those international quality standards.
Definitely. And we shouldn't ignore the polymer segment either.
Yeah.
That had a strong rebound, revenues up 22% year over year. So it seems like their secondary businesses are also seeing some positive momentum.
Okay, so strong orders, growing exports. That brings us neatly to part 3, strategic expansion. If they see all this demand coming, they need the capacity, right?
Absolutely. You can't fulfill a record order book without the factory floor to back it up.
So what are they doing on that front?
Well, they've just brought 75,000 metric tons per annum MTPA of new capacity fully online.
Okay, that's already done.
Already done. But they're not stopping there. Another 75,000 MTPA expansion is already underway.
Another 75K, so doubling down.
Pretty much. And the longer-term goal is ambitious. They're aiming for a total capacity of 600,000 MTPA.
600,000, wow. By when?
By the end of fiscal 28 or fiscal 29. So a massive scale-up planned over the next few years.
That kind of expansion costs serious money.
It does. They've earmarked about $2,500 million in CapEx just for this current 75K expansion phase.
Which loops back to why getting those finance costs down is so important.
Exactly. They need that financial flexibility to fund this growth without stressing the balance sheet too much.
But it's not just about building more factory space, is it? You mentioned winning those complex EHV projects. That requires technical expertise.
All right, quality and engineering are the price of admission, especially for those big global contracts. And this is where I think it gets really interesting. Their investments in R&D and testing.
Okay, what have they done there?
Well, they commissioned a second test bed facility, but it's not just another one. They've created what they call a first-of-its-kind dual transmission tower test bed.
Dual, meaning?
Meaning it can test two different large structures, like full-scale lattice towers and monopoles at the same time, simultaneously.
Why is that such a big deal? Speed?
Speed is a huge factor. Think about the testing required for these complex EHV projects. It's expensive, it's time-consuming. Being able to test two designs at once could shave months off project timelines.
Which, in a competitive global market,
is a massive advantage. Time is money, especially on these huge infrastructure builds.
And they're backing this up with academic research, too.
Yeah, they signed an MOU, a Memorandum of Understanding, with IIT Kharagpur.
One of the top engineering institutes.
Exactly. The research is focused specifically on galvanizing processes and developing predictive modeling.
Galvanizing. That's the coating that protects the towers from rust.
Precisely. It's critical for the lifespan and durability of the towers, especially in tough weather conditions. Improving that process, making it more efficient or effective, makes their product better, more reliable, and more attractive for global tenders.
So building capacity, enhancing testing, improving materials. What about actually getting into new markets?
They're tackling that directly too. The board just approved setting up subsidiaries in 3 key international regions.
Subsidiaries, so not just sales offices, a real physical presence. Seems like it. This suggests a deeper strategy than just exporting. It's about building local capabilities, understanding those markets, places like North America, Europe, maybe even local assembly or finishing down the line. It's about embedding themselves deeper.
And underpinning all this expansion, presumably, are digital upgrades?
Yep. They're in the final stages, user acceptance testing, or UAT, for implementing SAP S/4 HANA RISE.
A major ERP system upgrade.
A very major one. Go live is planned for December 2025. A modern system like this is pretty much essential to manage operations, supply chains, and finances across a growing global footprint in real time.
It keeps everything connected.
And tying back to efficiency and also ESG goals, they mentioned installing things like waste heat recovery systems and bag filters in their plants. Little things, but they add up.
Okay, that ESG mentioned is a perfect segue into part 4. Let's talk about corporate governance and those environmental, social, and governance factors. These are increasingly important, right? Hugely important, especially for winning business with large international clients or securing favorable financing. They often have strict ESG requirements.
So, what came out of that board meeting on November 7th besides the financial results?
Well, on the governance side, they formalized the role of Mr. Durga Singh Sakwat, who heads up their domestic tower business, bringing him into senior management personnel. Just ensures leadership alignment during growth.
Standard procedure mostly.
Pretty standard. And some housekeeping, like dealing with a small number of partly paid-up shares where investors didn't pay the final call. Routine stuff.
But there was a bigger governance item related to funding that expansion, wasn't there?
Ah, yes. The notice of postal ballot. They're asking shareholders for approval on 2 key things.
Which are?
First, to increase the company's overall borrowing limits. Second, to get approval to create mortgages or charges on company assets as security for those borrowings.
So basically getting the legal framework in place to borrow the large amounts needed for that 600,000 MTPA capacity goal.
That's exactly what it looks like. Getting shareholder approval under the Companies Act is necessary for borrowing beyond certain limits or securing significant loans against assets.
Okay, makes sense. Now, what about the E and S in ESG? Environmental and social.
On the environmental front, they highlighted their solar power installations. They've got about 2.65 megawatts of rooftop solar now.
Generating much power.
Generated about 2.54 million kilowatt hours last fiscal year. They estimate that reduces their greenhouse gas emissions by around 3,000 metric tons of CO2 equivalent over 3 years. It's a tangible step.
And for their products themselves, any environmental credentials?
This is crucial for exports. They've secured LCA and EPD certificates for their towers and poles.
LCA is life cycle assessment, and EPD, environmental product declaration.
Exactly. These basically map out the environmental impact of a product throughout its entire life, from manufacturing to disposal.
And why are these so important?
Because demanding markets, particularly in Europe and North America, increasingly require them. You often can't even bid on major public infrastructure projects without certified LCA and EPD data. It proves your product's sustainability claims.
So getting these certs is like getting a passport for your products to enter those markets.
That's a great way to put it. It removes a major barrier to competing globally.
Okay. And finally, on the social side.
They mentioned their flagship CSR program, Beti Padhao Abhiyan, focused on girls' education. They recently held its 7th edition and had Dr. S. Somanath, the former ISRO chairman, as a guest speaker. Shows ongoing community commitment.
Right. So, quite a comprehensive update. If we try to pull all these threads together, what's the main takeaway for you listening today?
I think the core story here is that Skipper seems to be at a genuine inflection point, as they put it.
Right.
Meaning they're not just riding the wave of massive T&D demand driven by renewables and grid upgrades, although they certainly are benefiting from those tailwinds, but they're also proactively investing heavily in the specific things needed to move up the value chain. The increased capacity, sure, but also the advanced testing, like that dual test bed, the R&D partnership with IIT, the move towards global subsidiaries.
So, transforming from maybe a strong domestic player into a serious global contender.
That seems to be the ambition. They're trying to build the operational efficiency, the technical capability, and the market access required to compete on a world stage while maintaining or improving those margins.
It's a compelling picture of matching internal capability building with external opportunity.
It is. But, here's the provocative thought to leave you with. We hear these huge forecasts, right? Global grid investment may be doubling in 5 years, needing, 7.4 million kilometers of new transmission lines by 2050.
Staggering number.
Just colossal.
Yeah.
So given that scale, think about this. What specific advantages will really matter most for Skipper or any company like them to truly dominate in those high-stakes, high-spec markets like North America and Europe? Is it just sheer manufacturing scale?
Or is it things like the speed advantage from that dual test bed?
or the deep market insights they might get from having actual subsidiaries on the ground in key regions.
Versus competitors who might just be exporting from afar.
Exactly. What combination of scale, speed, technical edge, and market intelligence will be the winning formula to capture a significant slice of that massive global T&D pie? It's not just about being big, it's about being smart and agile too.
That is indeed the complex challenge for the whole sector as this grid supercycle really gets going. A lot to think about there.
Definitely.
Okay, that's all the time we have for this deep dive. Thanks for joining us. We'll see you next time.